Good morning. You're watching DayBreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian stocks were mixed in early trade after reports of the Trump administration extending tariffs to all Chinese imports, and that weighed on investor sentiment. The United States could announce tariffs on all remaining Chinese imports by December if talks between President Donald Trump and Xi Jinping failed to reach a consensus. Paytm's losses for FY18 widened to 1,787 crore rupees, while its parent, 197 Communications, reported a loss of 1,604 crore rupees in FY18. Bharat Petroleum's net profit in the second quarter nearly halved, owing to lower inventory gains. Gross refining margins too fell below the $6 per barrel mark. And Tech Mahindra is the only Nifty company to report numbers today. The company's communications segment is likely to remain strong, while margins will likely be aided by a weaker rupee. Let's talk about the US markets now. They closed lower on Monday in a very volatile session, with the Dow Jones Industrial Average swinging over 900 points as concerns about global growth resurfaced following a news report that suggested that the US is about to intensify its trade war with China. Sue Keenan has all the updates for you from that market in this report.
Tech tumbled in a big way on Wall Street once again after a report indicated the Trump administration was planning to press its conflict against China with a new round of tariffs. What had been a day of extreme swings between gains and losses ended in red across the board. For the S&P 500, it was the sharpest reversal from gains to losses since 2015. For the NASDAQ 100, where most of the tech stocks are located, it dropped to the lowest levels since May. By the end of the day, the S&P and NASDAQ were on track for the longest monthly decline on record since the long bull market began. If you look at a 5-day chart of the S&P 500 at the lowest level on Monday, the S&P was 11% below its recent record before rebounding, now outside the level of correction, but earlier in the session, all three indexes were officially in correction. Notably, the big sell-off was in the FANGs, the widely held stocks such as Facebook, Amazon, Apple, Netflix, and Google. It is interesting to note that many hedge funds are big investors in these stocks. In fact, they're called hedge fund hotels among those on the street, and some of the hedge funds were among the heavy sellers, according to trading reports. Also notable, stocks outside the tech arena, outside the FANG trade, actually performed well. Stocks such as regional banks, auto parts companies, retailers like Macy's, food companies like Hershey showed significant gains, and many stock analysts say this indicates and perhaps confirms that there's been a trend away from the momentum and growth stocks toward value stocks on Wall Street. In the Tuesday session, Facebook will be reporting earnings. Sue Keenan, Bloomberg News.
All right, so that's a broad picture of how the equity markets functioned in the US yesterday. But one of the key factors was a report that stated the United States is preparing tariffs on all remaining Chinese imports if trade talks between Presidents Donald Trump and Xi Jinping fail to reconcile the ongoing trade dispute. The meeting is scheduled for November. Based on last year's numbers, the value of those remaining imports could stand at around $260 billion. Bloomberg's Enda Karan has all the details in this report.
If we don't get any kind of a breakthrough at the Xi and Trump meeting in November, then we're on track for, as our colleagues are reporting, tariffs on remaining Chinese goods that the US are importing. And then, of course, we head into January and we'll get a further increase in tariffs, in existing tariffs implemented on Chinese goods. And then, of course, there's always a risk of retaliation from the China side. They've made clear that they're not going to take this trade war lying down. So it shows you that we're still very much somewhat at the early stages really of this trade war, and there's much further to go. Both sides, or at least Washington at least, is trying to manage expectations, talk down prospects for a major breakthrough at the G20 talks. I think there's a feeling among analysts watching this that the best you could hope for is perhaps a meeting of ways towards some kind of negotiating framework that maybe both sides can agree on starting further talks that may at least slow down the implementation of tariffs. But the news overnight is a reminder of just how far apart both sides remain.
All right, now separately and also related to the trade war concerns, Chinese regulators are considering a tax cut to revive its flagging automotive market, lending support to a key industry that's been damaged by the ongoing trade war with the US. How likely is the measure to be passed, and who will it affect? Bloomberg's Tom McKenzie reports.
This is a lever that Chinese policymakers have played and used before. What we're hearing is that the state planning body, the NDRC, is proposing a cut of 10%, from 10% to 5%, I should say, on cars, small passenger cars, those with engine sizes of 1.6 litres or below, which is about 70% of all the cars sold here. Now, it's just a proposal at this stage. We don't know if it's actually going to be put into practice, and we don't know the time frame, but even so, you saw that reaction, that positive reaction from the car stocks in Europe and the US yesterday, the likes of Ford, VW and Daimler rallying on this news. The timing is interesting, given that we are now potentially looking at the first slowdown in the Chinese auto market for over 2 decades. This is the world's largest auto market. We've had year after year of record sales, but in the last 4 months, we've had 4 straight months where the sales have dropped. You've had the likes of Renault, you've had the likes of VW cutting their forecasts for sales in the Chinese market. So this tax cut, if it comes into force, would provide relief for this market, according to the analysts that we've been speaking to. Just one data point alone, in terms of the dealerships here in China and the number of cars they've been purchasing in the month of September alone, that number dropped 13%. So yes, some are saying this could be the perfect tonic to revive this market.
Well, Tom McKenzie there. Remember, one key point that he made over there is that the potential cut is for small vehicles. So remember that Tata Motors has Jaguar Land Rover, which is its subsidiary that has a plant in the in China and also sells a lot of vehicles in China, but largely they're an SUV manufacturer. All right, but with that, let's take a look at how the Asian markets are panning out. We have the Chinese markets that have just about opened up, and they've opened up with, well, cuts of between 0.3% and 0.5%. You also have the Hang Seng that's just about opened up about 0.7% in the red. The early risers had actually started trading in the red just marginally, but they reversed those signs. In fact, the Nikkei is currently trading with gains of about 0.75%, and you also have the Kospi in South Korea that's trading positive about 0.6%. So I would say at this point that the Asian markets seem to be on tenterhooks, waiting for more developments with regard to the updates that have come in on that report with regard to the trade war between the US and China. But for now, let's turn to the Indian markets, in fact, and see what's panned out for today. Darshan Mehta is joining me now to tell you about the trade setup for the day and also to tell you what's happening in the futures and options space. Well, Darshan, like I was saying, it's a little bit of a mixed bag from Asia right now, but the SGX Nifty indicating a downtick even now.
Yeah, so it's recovered significantly from the lows of the day, but all I can say is yesterday also no one anticipated a rip-rolling rally of 250 points in the Nifty, despite the US markets correcting, Asia being weak. So the setup seems to be similar. US was weak, Asia is not doing all that well. The SGX Nifty is indicating a downtick at this point of time, but you never know, markets are extremely volatile over the past few days. So pull up the SGX Nifty. We came very close to breaching the 10,000 level for the second day in a row, but then a big rally that came in on the Nifty. It managed to rally almost 200 points in day. Right now, it's down 24 points. That's what the SGX Nifty is indicating, but there's still time to go, 2 hours to go for our markets to open, so that could change any time. What happened? HDFC Bank, the markets was very surprised because because when Aditya Puri got the extension, the market was anticipating that the ADR will rally. Somehow, with the weakness that was seen in our market, the ADR in US also was down in trade. Apart from it, Tata Motors was up almost 8%. Positive news coming in China in terms of tax cut, but some of their cars may be impacted on the positive way. But Tata Motors, no doubt, reacting positively. Wipro has been doing well of late in the ADR market. So that's the trend that we are seeing. ICICI Bank reacting just 1.5% to the 10%, because most of the reaction came in trade on Friday itself. Vedanta and Dr. Reddy's were the other counters that moved up, and even Dr. Reddy's, the reaction came in on Friday on the ADR. That's why the 5% move was not reflected in the ADR. Now let's take a look at what happened yesterday. 220 points gain on the Nifty. Look at the gains that are coming on the mid cap and the small cap end of the market. So it was a broad-based rally. The big gainer obviously was the Nifty PSU Bank Index, which is up almost close to 7% in trade. So almost 8% in trade, in fact. And Nifty Bank, ICICI, remember, ICICI Bank has a large weight on the Nifty Bank, and that's why the Nifty Bank was doing well. It was up almost 2%. That even propelled the PSU Bank because SBI did well and a lot of resolutions coming in, the SR issue getting solved, the power issue getting solved. So banks are doing well in trade. Now, some of the indices that need to be brought in focus. The pharma index was up 5%. DVs and Dr. Reddy's were the two stocks which managed to rally, that gained significantly. And the metal index, after being in the doldrums, finally managed to move up almost 2.6%. So that's the basic trade setup that you're seeing. FIs, despite the big move that came in, were sellers to the tune of 2,200 crores. DI has bought in almost 2,500 crores in the cash market. Now, if you're looking at what the contribution was, 56 points was basically on account of ICICI Bank. Reliance contributed another 38 points. L&T will come out with numbers tomorrow that contributed, and TCS did manage to contribute 20%. So all the heavyweights did manage to contribute. What is surprisingly is that the HDFC twins are not contributing. Kotak Bank is not contributing, and IndusInd Bank has problems of its own in terms of the IL&FS exposure. But nevertheless, because of the rally that we've seen in these counters, the Nifty managed to stay up by almost 220 points. A little bit of a commodity update also. If you're looking at it, oil is down for the second day in a row. You can clearly see that Brent is now trading below the $77 mark, barrel per mark. Base metals, let's see how they panned out in trade. Most of the base metals on the LME were not doing well. You had aluminium, which was down 0.7%. You could see that zinc was down over 1%, nickel was down over 1%, lead was down over 2%. So weak trades that are coming in. And even if you're looking at China, what's happening currently, they've just managed to open. All of them are trading with a negative bias. And even if you see here the YTD changes that are there, you can clearly see the drops that are there as far as all the base metals are concerned. So it's not been a very, very good year as far as the commodity market is concerned. Moving on, and let's address how the F&O market managed to pan out. And obviously, the markets managed to react positively. But in fact, there was short covering that was seen on the Nifty. Open interest was down almost 0.3%. The other stocks, let's pull up the Bank Nifty. The Bank Nifty saw huge short covering. Open interest was down 5%. So imagine the shorts that were there in the market that, despite a 200-point move on the Nifty and almost a 500-point move on the Nifty Bank, and still there is short covering. The fresh longs have not come in. What happened in trade yesterday? 10,000 is a big support level for the market, and 10,200, which was in the fear of that, that could go. Again, now reinforces the view that 10,200 is a strong support that the bulls will have built for itself. Call writers are active marginally from levels of 10,200 to higher level. Yesterday, what must have happened is the fact that put writers were active. They were active from 10,000, 10,100, 10,200. So they don't want the markets to go below that level. And call writers were seen shedding positions in open interest, 10,100 and 10,500. That's the Nifty open interest. Adani Power continues to remain the only stock in the F&O ban. Pull up the PCR. The Nifty PCR moved up from 1.44 to 1.51. But look at the move on the Nifty Bank PCR. From 0.66, it moved all the way to 1.26 because of a 2.5% rally that we saw on the Nifty Bank. Couple of stocks that I want to highlight. First of all, Ambuja Cements, a block deal happening yesterday. Look at the open interest built up of 63% on the long side. So probably there is accumulation that's happening on Ambuja Cements. The other counter is DV's Lab, managed to rally on high open interest built up, post a very strong set of numbers. The third stock that I want to point out is Voltas. Again, didn't move too much, but look at the open interest accumulation. So there is fresh buying that is clearly happening on Voltas. And finally, the last stock that they're talking about is Indiabulls Housing Finance. Short covering was seen, open interest was down 2%, and the index managed to move up almost 13%.
All right, thanks so much for that, Darshan. Well, with comprehensive view of how we're looking ahead of the Open today, you'll find all the live market action, of course, on Bloomberg Quint and Bloomberg Quint Live. Let's talk about a special series that we're doing now. One of India's largest fund managers, S. Naren of ICICI Prudential, believes that the current market volatility is a great opportunity for fund managers like him, as well as for investors looking to invest via the STP or SIP route. In our special series, Navigating Through Uncertainty, Narayan also talks about the sectors that he's currently contrarian on. Listen in.
I think people are becoming more risk averse, and people are looking at, there is a period of time when you're only interested in looking at upsides. Now I find people are looking at both upsides and downsides. And that has kind of changed the environment to a more cautious kind of view that people have. The positive at this point of time clearly is the fact that people are continuing in SIPs, which they should do when the markets are down. And that is a positive, that while people are looking at how to invest more carefully lump sum money, they are continuing with the SIPs, and that is a positive development.
You are known to identify, as I said, some of the most interesting contrarian bets. Where are you contrarian right now?
Actually, we are contrarian in quite a few PSUs.
Interesting.
Because many of those PSU stocks have come down to very low valuations. And in, as usual, in one of the sectors which has done very badly is telecom recently. So I've gone back to telecom because telecom as a sector does look to be one of the most important sectors from the way all of us use. So I would say that's another interesting. And clearly the corporate facing banks with a deposit franchise has been another very key area where we are keen on. Another area which I would say contrarian is metals. But you know, metals have always been volatile, and I believe over the last 5-6 years, there's been no new capacity which has come up, which actually should help these. They fit many of my criteria. It's an import substitution sector. It's a sector where new competition is not being seen, and it benefits out of the entire dollar-rupee move. So I would say that's another sector. These are some of the areas where we have actually bet on.
And you can catch that entire conversation today at 10:30 a.m. on Bloomberg Quint Live. Let's talk about the rupee now. The rupee ended almost flat at 73.45 against the US dollar on Monday after its initial gains were erased by late dollar demand from importers. And this was in the context of strong equity markets that Darshan already told you about, and the RBI's move to ease the liquidity crunch. Despite the initial bounce, the Indian currency appeared to struggle as the dollar remained broadly firm. Foreign institutional investors pulled out nearly 2,230 crore rupees from the capital markets, with the dollar hovering near a 10-week high. The dollar index, which represents the strength of the dollar against a basket of 6 currencies, hit 96.66. Now, also talking about the bond markets, the yield on the 10-year government bond fell nearly 7 basis points to a near 11-week low, and that's after the Reserve Bank of India announced more open market operations, in fact purchases of government bonds in November. On to earnings now. Lower than expected inventory gains and a higher forex loss impacted BPCL's second quarter performance. Sumit Sarkar is here to tell you about the numbers. Sumit, the key numbers there, it's quite a miss on the net profit front, isn't it?
It's not only the net profit front. If you see all the headline numbers, that is revenue, EBITDA and net profit, it was a miss on all fronts for BPCL, and it was a very weak quarter compared to the last quarter. Now, if you see the headline numbers, the revenue of the company was higher by only 1% to close to 72,292 crore rupees. However, the EBITDA, now that was down by nearly 38% to close to 2,400 crore rupees. Margins contracted to 3.3%, while the net profit, now that was lower by around 47% to close to 1,200 crore rupees. Now, lower than expected sales volume, gross refining margins, lower inventory gains and higher forex losses impacted the second quarter numbers of BPCL. Now, if you see the inventory gains, they were lower by nearly 46% to close to 1,435 crore rupees versus 2,700 crore rupees reported by the company in the last quarter. While in this quarter, as rupee was weaker, company reported a foreign exchange loss of close to 930 crore rupees versus 705 crore rupees reported by the company in the last quarter. Now, on the operational side, if you see the gross refining margin, now that came in at around $5.57 per barrel barrel versus $7.5 per barrel reported by the company in the last quarter. Now, lower gross refining margins were because of lower inventory gains and because of the fire incident that happened in one of the refineries of BPCL, that was in the Mumbai refinery, that a fire incident happened, because of which the GRMs were lower. On the throughput side, the throughput were down by around 2.2% to close to 7.57 million metric tons, while sales volume, they were lower by around 8% to close to 10.08 MMT. Now, analysts were going with a number of close to 10.9 million metric tons, but the company reported a number of only 10 million metric tons, and that was the main reason why the numbers were much below than what analysts were expecting. Lastly, on the balance sheet side, if you see the company's debt, now that was higher by nearly 22% to close to 24,000 crore rupees versus close to 20,000 crore rupees, the number reported by the company in the last quarter. Lastly, the tax rate was also marginally higher for BPCL in the second quarter at around 35% versus 32% reported by the company in the last quarter.
All right, thanks so much for that, Somit. Well, let's talk about the earnings that you have to watch out for today. Tech Mahindra is expected to post a strong profit growth with a considerable expansion in margins. Agam Vakil is standing by with the key numbers. Agam, what's Tech Mahindra likely to report?
Well, as you've put it, Alex, we are expecting a good quarter from Tech Mahindra, considering an expectation of an uptick of around 4% quarter on quarter. We're likely, that's in terms of revenues. We're likely to see an expansion of margins to around 14.1% against 12.9%, and we could see profits rise as much as nearly 13% sequentially. Among the few factors that will come into aid to Tech Mahindra will be the strength in communications business. We're likely to see an uptick there. Of course, where the commentary on the capital expenditure in 5G from some of his clients will be very important. This, however, will be offset partially by softness in the enterprise vertical. We do see an improving business mix, and that is also likely to aid margins expansion. Don't forget, we do have the Rupee tailwind coming in when it comes to margins as well. So that'll be another factor behind as to why we can see those margins come higher. There is also an absence of seasonality in Comviva, and as I mentioned, we will be looking out for what the management has to say about the capital expenditure in the 5G series, as well as health and updates in Lightbridge Communications. Finally, we're also looking at traction and deal wins in the enterprise business. On the whole, it's going to be a good quarter for Tech Mahindra.
All right, thanks so much for that, Agam, and good morning. All right, Nikki Mirchandani is joining me now with the stocks in news. Nikki, what are the stocks on your list? Several earnings, of course, to look forward to. What are you looking at today?
I'm going to start off with a news-based development where Redington has proposed a buyback of around 1.1 crore equity share at a price of around 125 each, aggregating to a sum of around 139 odd crore. Now, this represents a premium of more than 40% from the current market price. And second in the list is Rane Holdings, where the company has approved a divestment of more than 48% stake in the JV company. Also, we're tracking in Jet Airways, which has said that it's going to be bringing in Goldman and Boston Consultancy Group on board to find a suitable partner for the fundraising plan to help improve its operational efficiency. That's a Mint exclusive that we have. In terms of bunch of earnings that we're tracking this morning, LIC Housing Finance, which is put up in line with estimates number. Net interest income of the company has risen by 9.2% to a number of more than 1,050 crore as compared to 995 crore that we were estimating. Net profit for the company has risen more than 11% at 573 crore, which is pretty much in line with the estimates of 578 crore. Union Bank of India, again a good set of number reported by the company. The net interest income for the company has risen, the bank has risen more than 7%, and the bank has reported a net profit of 139 crore as compared to a net loss, mainly on account of the lower provisioning, a 53% dip in provisions, a YOY basis. And also if you look at the asset quality, I would say pretty much stable for that matter. Gross NP is at 15.7 as compared to 16% that we've seen sequentially. DCM Shriram, a weak set of numbers reported by the company on consolidated level. Revenue up by as much as 6%. That's a pretty muted growth out there. EBITDA is just up by 2%, and the net profit is down by as much as 1.9%, weighed down by earnings. Spark, good set of numbers reported by the company, and Just Dial 2 has reported a decent show. In terms of the weak weak earnings. We're tracking in Mahindra Holidays and Resort, which has reported net profit, which is down by as much as 54%.
All right. Thanks, Nikki, for that update. Well, Vijay Shekhar Sharma's Paytm group is now losing more money in its online retail business, where it is a distant third behind Flipkart and Amazon, and that compared with its digital payments, where it is a market leader. Bloomberg Quint's Nishant Sharma has more details in this report.
Paytm Mall, the online retailing platform of India's largest digital payments company, Paytm lost close to about 5 crores a day in the year ended March 2018 as it aggressively expanded its footprint in India's e-commerce market, which is largely dominated by Amazon and Walmart. Now, Paytm spent close to about 2,500 crores in March for the year ended March 2018, as per the filings made to the register of companies, out of which close to 900 crores was a part of the advertisement spent alone. Now, if you look at Paytm Mall's losses, it lost close to about 1,700 crores, but was only able to generate a revenue about roughly 700 crores for the year ended March 2018. Now, Paytm Mall was carved out in August 2016 as a separate entity out of 197 Communication Limited, the company behind the brand Paytm. And it's been slowly emerging as one of the key players in the India's e-commerce ecosystem, and is backed by one of the key major investors such as Alibaba, SoftBank Vision Fund, and also has SAF partners. And over the last 1.5 years has also managed to raise more than $600 million and is last valued at about more than $2 billion.
Now, a Lion Air plane carrying 189 people crashed off the coast of Jakarta just minutes after takeoff. You must have read about this already, but the crash is a significant blow to the country's aviation safety record after the lifting of bans on the airlines by the European Union and US. Bloomberg's Kyungi Park and Sherry Ahn discuss the specifics of the problem. Take a look.
Well, from the data that was collected by Flight Radar 24, that it seems like the aircraft was going at a very erratic speed and altitude. And from the data that was collected, it seemed like the plane was actually falling far faster than what it was normally supposed to do when it was descending. The pilots did call back to the controller saying that they wanted to come back to Jakarta. So with the speed that we've seen in the database that was sent over for now, it seems like they have been descending at a far faster speed than which was normal. So there's actually more questions right now than answers. And we'll have to wait until the search team finds the black box. That is going to answer some of these key questions that I think is really a big question mark right now of what happened in the last minutes of that flight.
We, of course, know that Indonesia has a history of air safety concerns, but it's only been 4 months since the European Union lifted a flying ban. So what's the impact of this going to be on the industry there?
So obviously, be more scrutinized closely. And yes, it is a concern given that they have just come out of the blacklist in EU. And obviously, a lot of people will be watching what the outcome of this is. But as in cases of all crashes, we still have to wait and see what caused the accident. Right now, we don't have any answers. It's all speculation at the moment. But I think a lot of people will definitely watch very closely at what they find out from this crash.
189 souls lost there. Key details, of course, will emerge from the black box, which essentially tabulates all the data that the plane sends just before a crash. Let's talk about a few stories that you'll find on the website if you log on. That's BloombergQuint.com. First up, Bharti Airtel is delaying a planned initial public offering of its Africa unit due to the turmoil in emerging market stocks. People with knowledge of the matter have told this to Bloomberg. The plan to list has now been pushed by half a year, and the company plans to seek an enterprise value of $8 billion. The Speaker of Sri Lanka's parliament has warned that his country could descend into political violence if the legislature remains suspended throughout a leadership struggle that has plunged the island nation into a constitutional crisis. The capital, Colombo, was gripped by political intrigue after President Maithripala Sirisena said that he had to fire Prime Minister Ranil Wickremesinghe late on Friday because of an assassination plot. Sirisena appointed former strongman Mahinda Rajapaksa, who ruled between 2005 and 2015 as the country's new Prime Minister, and by Saturday had suspended the parliament. Wickremesinghe responded by describing his ousting as blatantly illegal, unconstitutional and opportunistic. Well, that's all we have for you in this edition of Daybreak, but up next is all you need to know, so do stay tuned. This is Bloomberg Quint.